Cool. Good morning, everyone. Thanks for taking the time to listen in on what I find very interesting topic, crypto M&A. And it's good to see actually so many people here, but it obviously raises a question of how many people have been involved in a transaction in their lives already. Like, who has ever been, if you can give me a quick sign of hands on either buying a company or selling a company. Okay. So that's quite a few. We're speaking as basically with the expert group here. That's great. So my name is Karl. I'm one of the co-founders at Ahrend. Me and JP, who you'll get to meet in 10 minutes, we worked together at Blackstone for a good amount of years in their private equity group before basically starting Ahrend to bring institutional financial services to crypto founders and management teams. And today we briefly want to talk about, one, where are we in basically M&A world today? What does the market look like? Then also dive deeper into the key segments that we see a lot of activity in and also explain a bit why. Before then, we want to end the note on a very interesting topic, which we find or potentially see as a catalyst for M&A volumes in the next decade, which is on-chain M&A. On Ahrend briefly, this talk is obviously mainly around M&A, but some of you may know us also for our work in the secondary space, where we work a lot with founders on brokering equity and token transactions, and also for our work as delegates in some key ecosystems. We've, as said, started this 3.5 years ago. Today we're 15 people around the globe, have established ourselves as the #1 sell-side advisor for crypto founders. And it's been a good journey so far. As you can see, a bunch of work been done to date. But I think this slide shows it all. We're just in the beginning. Coming out of a, as you know, protected bear market, we've seen M&A volumes on the rise ever since the end of 2023. And to nobody's surprise, M&A volumes in 2025 will reach, or will basically be the highest volume number ever in crypto, and that by an order of magnitude. We've seen the most billion-dollar transactions in crypto this year already. There have been 1 or 2 before that, and we've already had 4 this year. So why is that? One, we're obviously in a more bullish territory, but also significant regulatory tailwinds from the US have paved the way, I think, also for institutional players to become more active, and that forces them to think about buy versus build as they think about growth. And a lot of them are now also putting the button on the buy side. Where specifically do they do that? So we've identified 4 key verticals for us at Ahrend. One is clearly trading infrastructure. Those would be exchanges, market makers, prime brokers. You have a lot of activity in staking. We'll get to that. Payments, to nobody's surprise. And then lastly, and this is where we want to do a bit of a deep dive because it's a bit less covered, is on-chain M&A. So let me actually go through trading infrastructure first. Here, you will have seen the announcement of Coinbase acquiring Deribit, basically increasing the product offerage also in the derivatives and structured product side. You've seen Robinhood acquiring Bitstamp to increase their licensing footprint around the globe and also add institutional trading capabilities. And then in a third bucket, which we think of as geographical expansion or also more broadly international consolidation, Swyftx has acquired Easy Crypto. This is the deal that we worked on, so know the deal quite well. Easy Crypto was the largest crypto exchange in New Zealand, and Swyftx is one of the leading exchanges in Australia, has acquired them to obviously consolidate user numbers and create significant synergies between the two businesses, but also pave their way into a much larger international exchange player. Another interesting development that we continue to run into is this move from traditional players, not yet actively in crypto, basically, trying to enter the space. And all these players today face what we call a buy versus build decision. In the case of DaVinci, which is one of the largest traditional market makers in Europe, they've decided to acquire the loan book from a crypto market maker called Skynet, which some of you may have worked with in the past, and also took on a bunch of their team to now set up a crypto franchise within the organization. If you look at staking, obviously the rise of proof-of-stake networks has brought up especially in the first phase, a group of dedicated pure play staking companies. But that has obviously evolved now into something where a lot of tangential businesses have adjacencies to staking and have over time insourced those capabilities. There's a classical vertical integration that we could have also that we were able to see with Sol Strategies, acquiring basically a Solana staker to also capture the staking operations internally and don't necessarily have to partner with someone externally. You were able to see that also with EigenLayers acquisitions, and it's generally, given how nascent that space is, you see a lot of innovation in that segment, and that typically also calls for activity. And it's also one place that has become more and more competitive over time, so that people now need to consolidate assets, need to go into new networks to be able to find their also differentiation and be able to survive in the long run. And this is what we've done actually with the sale of French validators, who have been basically a very good franchise for retail and institutional staking delegations, and are now part of Zweig Group, who have been able to add significant network reach and also staking assets under delegation. Then lastly, if we look at payments, this is obviously a hottest topic on the street right now. You would have seen MoonPay taking on Ahrend. Also, given we're in Cannes, one of the leading players in Europe when it comes to stablecoin API checkouts. Ripple back in the days has acquired Metaco to also, basically gain banking network over here in Europe. Clearly, also with the intention to roll out their own stablecoin and then establish a strong payment network over here. And to nobody's surprise again, Stripe has been one of the key leaders as it comes to stablecoin payments adoption. The case study is almost unparalleled. I know the CEO 2 days ago has gone public on how they want to double down on stablecoin payments. They've obviously acquired Bridge to internalize the stablecoin checkout system, and have now also acquired Privy, an embedded wallet company, to further verticalize the value chain that they have internally. And with that, I want to briefly hand over to my co-founder, JP, who is going to talk more about the on-chain M&A landscape and what we see there.
Awesome. Thank you, Karl. It's great to be here and give you a bit of an overview now of what we think will be a key driver of M&A activity in the years to come. So Karl spoke a bit about the more traditional M&A part of the industry, meaning more centralized equity M&A deals. And like everything in crypto, we think that also M&A activity is going to move more on chain. So we think there will be more M&A transactions involving protocols, DAOs, foundations, oftentimes also involving tokens as part of the consideration or as part of the acquired instrument. And we've already seen a first sort of wave of transactions in the on-chain world. For various reasons, basically, right? This can be either for example, product expansion. It can also be sort of a more centralized entity acquiring an on-chain protocol. So think of, for example, centralized exchange now acquiring a DEX, or a traditional payments company acquiring a decentralized stablecoin, or vice versa. Think of an L2 blockchain at some point acquiring a centralized exchange or a neo broker to basically tap into a more regulated business model and expand the user base. So can go in different directions, and I think also across really all key verticals in the on-chain world. One of the drivers here is basically the fact that the on-chain world is extremely fragmented. So if you look at the number of tokens, and this chart on the top basically tracks all the CoinGecko listed coins, and this number has actually tripled just over the last few years. And there is obviously a lot more tokens and meme coins that have emerged in the last few years. So the market is extremely fragmented, which also means that capital, talent, liquidity is very fragmented and distributed across different ecosystems and projects. And so What it means is basically that at some point there will be more consolidation. So think of, protocols acquiring smaller players in their respective categories, or again, acquiring protocols that target different audience or different product categories. We've seen very similar dynamics actually at play during the dot-com era. So in the 90s, there were a lot of, at that time, sort of listed companies, equity companies that evolved and actually driving a lot of M&A volume. So it has increased 8 times over those years in the 90s. And we're basically expecting somewhat similar dynamics also in the token and on-chain world over the next years. One other key driver is the fact that a lot of these token projects have huge treasuries, also in traditional TradFi terms. Some of them, are in the billions, and oftentimes those treasuries are not deployed very efficiently. Maybe only sort of on-chain in some liquid assets, but obviously M&A is a great opportunity and asset class also, if you will, for token projects to grow their overall business and deploy capital either in the off-chain or on-chain world. What's interesting about some token M&A deals, and especially in the DAO world, is that a lot of it is very transparent and public, right? So in a typical M&A process, confidentiality is extremely important, and oftentimes, ideally, nothing is leaked before the official announcement and signing of the transaction. Now, in on-chain M&A, oftentimes you may have to involve the community, so there has to be some kind of DAO proposal, and therefore a lot of the discussions are actually already public before anything is signed or somewhat decided, and can therefore also be tracked. And we've put together this chart really which shows kind of the number of proposals related to M&A or majority deals, which has actually increased quite significantly since the last cycle. I think the last few months we've seen a slight decline, which might also be driven by, just the overall sentiment change in the industry of sort of moving away from the DAO model in certain instances under the new US administration. But overall, there's clearly a trend of, more discussions and proposals around on-chain M&A. Here you can see a bunch of examples of on-chain M&A transactions. Some of them are very famous. You might have heard of the Rarify deal. And I think what became clear in many of these instances is that unlike in more traditional M&A deals, for on-chain deals, you're really lacking a clear framework and processes. Sometimes there's regulatory, legal questions. So it's a very different process in a lot of ways. Obviously, also the fact that you need to involve many more stakeholders. It's not only 2 CEOs who are basically making a decision and maybe involving their corporate development teams and advisors, but here you may have a larger community that sort of has very strong opinions in some instances. And for many of these deals, this was actually one of the main problems, where essentially there was a huge community backlash. Or sort of stakeholders were not really happy with sort of the valuation outcome or the governance changes. So a lot of different dynamics at play here, which can make a token M&A deal much more difficult than a traditional, more centralized M&A deal. But I think it's also up to the industry really to set more standards and define what the processes can look like in such a transaction. And then I think one example we've worked on here is basically the acquisition of MySoFinance by Enzyme, which is an on-chain asset management protocol. They acquired MySoFinance basically to expand into the on-chain structured product segment. So really a great opportunity for them to become a one-stop shop for their client base in DeFi. And this was an all-token deal. So kind of the equivalent of what in traditional world would be an all-stock M&A transaction. And another very interesting example we worked on last year was basically we were mandated by the Arbitrum DAO to evaluate M&A opportunities for them, develop an M&A strategy. And I think this was a very exciting opportunity, not only for us, but I think for the space more generally. And it's a great sign of also large DAOs and L2s really thinking about M&A. You might have seen some other M&A deal announcements in the last few months on this, but essentially, Arbitrum DAO was also keen to explore this. We looked into various verticals, evaluated over 50 different categories of what could make sense for an Arbitrum DAO to acquire. Had some great discussions with their stakeholders. I think one of the key takeaways here again is that, to my previous point, you need to really define processes. How does a DAO even acquire, maybe off-chain entity? How do they operate them? And then what is really strategically the right fit and when is the right time also for such a large DAO to make an acquisition? Obviously, for it to be meaningful, it also has to be a big M&A deal. So I think some of these large DAOs are really in a position to make huge acquisitions, maybe bigger than what we've seen in crypto thus far. And so it's very great to see that sort of more and more large DAOs are also thinking in the same directions. And I think we all are very convinced that we're going to see more big M&A deals, might be driven by some of the L1s and L2s in the future. So to wrap up, I think three main key takeaways from our side. I think, first of all, as crypto finds more institutional adoption, there will have to be more M&A activity, just because a lot of, especially TradFi or big tech companies that haven't really had a crypto roadmap in the last few years now really need to catch up and accelerate their strategy, and M&A is a great toolkit for that. Secondly, since the on-chain world is so fragmented across all different metrics, we're expecting more and more M&A activity to move on-chain, either by centralized acquirers or also decentralized protocols, for example. And I think the last one, and a bit of a hot take from us, is that we're going to see M&A and IPO deal activity actually outgrow the number of what are multi-billion-dollar token launches for a couple of reasons. But in essence, over the last few months already, we've seen a bunch of IPOs and multi-billion-dollar M&A deals, which are obviously also to some extent then targeting a different type of, or tapping into a different type of capital markets participants. But we really think as the industry matures, this is going to become a very viable exit path and also alternative to a token launch for a lot of founders and teams. Great. I think that wraps it up. So thanks a lot for listening in. Feel free to connect if you want to learn more about Areta and what we do. And wishing you all a great week in Cannes.
Is there any questions for our speaker? Okay. So.
Hi there. I just wanted to ask, on the institutional side, we've seen a lot of activity in sort of private credit and particularly massive growth in the sort of credit secondaries market. Do you envisage anything happening in any sort of way in the sort of crypto markets would be similar?
With regards to private credit in crypto?
Yeah.
Less so for now, I would say. In general, in like sort of a lot of the asset classes in the traditional world, we haven't really seen a similar sort of surge in activity in crypto. So private credit, private equity, things like that are still much more nascent than, for example, even M&A, but certainly sort of equity capital markets activity and token capital markets, if you will. So I think there's going to be a lot more sophistication in terms of debt capital markets, credit activity, and sort of maybe even private equity type of asset classes emerging in crypto. But for now, it's been rather a bit under the radar, I would say.
Thanks.
We have one more question.
Hello, my name is Olga. Thank you very much for your presentation and the presentation of your colleague. I would like to thank you also for the DAO M&A report that I read. It was very useful. Thanks. You have talked a lot there and today about your successful transactions and how you did them. My question is, did you have any deals that actually did not go through? And what were the main reasons for that? Thank you.
Yeah, it's a great question, and obviously you tend to talk only about the successes, as always. There have been instances, I think, for us, but for other firms and a lot of founders where a deal would not go through in the end for various reasons. One consideration, obviously, in crypto is its cyclicality, right? So in a market downturn, it's a lot more difficult to get deals done. Valuations coming down, is less capital available to deploy, right, by strategic acquirers. So the general market environment can play a very important role here. Secondly, obviously, in an M&A process, there's a lot of sort of components that can really lead to either the buyer or the seller pulling out of a process at some point. You may run an auction process, and at the end of the day, the bids are not basically meeting the seller side expectations or the market expectations, and so the other side might walk away from a deal. So there's a lot of reasons why an M&A opportunity can collapse, same as in the traditional world, right? And I think especially with regards to on-chain M&A, there's a few more risks and factors that can play a role here, like the community backlash I mentioned and sort of the general governance processes. So I think really on top of the already many risk factors that you have in an M&A transaction in crypto, there can be even more so, both for on-chain M&A, but then also due to the market environment.
Okay, thank you very much for our speaker. We will invite the new speaker here.